Florida condo prices just posted their sharpest drop in 15 years. The median sale price crashed to $285,000 in August 2025, down 8.1% from a year earlier and 14% below the 2023 peak. Homeowners Association fees are hitting $2,000 per month in some buildings, the highest burden of any major metro in America. But in 2025, as owners unload units at massive discounts and demand hits one of the lowest levels on record, it wasn't just the market that collapsed. It was the governor's carefully crafted narrative. Now, with climbing HOA fees and vanishing insurance options crushing what's left of Florida's condo market, billions in property values, and the state's entire economic reputation are on the line. Why did Florida's condo dream turn into a financial trap almost overnight? And how did a single building collapse trigger a market-wide catastrophe? The explanation of this new shocking record starts right here.
Michael Lucchese is having a hard time selling his condo at the Scion on South Ocean Drive in Hollywood. His one-bedroom, two-bath unit has been sitting on the market for more than a year.
I want to sell. How's it looking? Listen, it's going to take a while, so...
August 2025 marked a historic turning point for Florida real estate. Condo prices fell 8.1% year over year, the steepest August decline since 2010. Back then, during the aftermath of the 2008 financial crisis, prices plummeted 18.4% in a single year. Now, 15 years later, Florida condos are in free fall again. But this time, the culprit isn't subprime mortgages or reckless lending. It's something far more structural and far harder to fix.
Myra Villalona is sitting on what she thought was real estate gold.
This is the master bedroom, and we redid the floors, the walls.
She bought this two-bed, two-bath condo near Fort Lauderdale in 2021 for $145,000, hoping to pounce on pandemic-era real estate prices.
This is really a great community to live in. It's just not an investment right now. No, it's not a good one, at least.
Villalona's condo has been on the market since last November. Despite spending $20,000 upgrading the kitchen and the bathrooms, she's seen virtually no potential buyers.
The median Florida condo sold for $285,000 in August 2025, down 14% from the July 2023 peak of roughly $331,000. That's not a correction, that's a collapse, and the pain is spreading across every coastal market in the state. Miami, Fort Lauderdale, Tampa, Jacksonville, none are immune. Senior economic research analysts at Realtor.com confirm that Florida's condo market is softening due to rising home insurance costs, elevated HOA fees, and increasing climate-related risks. The trifecta of doom. Here's what's actually happening on the ground. Condo owners across Florida are receiving notices of special assessments, mandatory fees to cover building repairs and safety upgrades. Some buildings are charging $2,000 per month or more in HOA fees alone. That's on top of mortgage payments, property taxes, and insurance premiums that have tripled in some areas. Retirees on fixed incomes are getting crushed. Working families are getting priced out. Investors are dumping units at a loss just to escape the financial bleeding. The root of this crisis traces back to June 24, 2021. The Champlain Towers South condo in Surfside, Florida, partially collapsed in the middle of the night, killing 98 people and injuring 11 others. The 12-story building, constructed in 1981, had been showing signs of structural failure for years. Investigators discovered deteriorated concrete in the basement parking garage caused by water damage. The pool deck had deficiencies in alignment and reinforcement. Multiple design and construction features were not up to code. The tragedy sent shockwaves through Florida's entire condo market. Buyers started asking questions that nobody had been asking before. How old is this building? When was the last structural inspection? Are there deferred maintenance issues? What's the reserve fund balance? Suddenly, the cosmetic appeal of waterfront views and resort-style amenities couldn't mask the underlying risk. Florida's state legislature responded by passing sweeping building safety reforms. The new law mandates that condo buildings over 30 years old must pass a structural integrity inspection. Then it requires homeowners and condo associations to finance the needed maintenance and repair work. The law doesn't provide state funding. It doesn't offer tax breaks or subsidies. It simply shifts the entire financial burden onto existing condo owners. The financial impact has been catastrophic. Buildings that deferred maintenance for decades are now facing multi-million-dollar repair bills. Condo associations are issuing special assessments ranging from $10,000 to over $100,000 per unit. Owners who thought they were living in affordable retirement communities are suddenly staring at six-figure bills they can't afford. Many are choosing to sell rather than pay. But when everyone in a building tries to sell at once, prices collapse. Even in buildings that haven't issued assessments yet, the anxiety is palpable. Buyers know the bills are coming. They're factoring future costs into their offers, which means current owners are taking massive haircuts on sale prices. Real estate agents report a fundamental shift in buyer confidence when it comes to Florida condos. Caution has replaced enthusiasm. Due diligence has replaced impulse buying. Then there's the insurance crisis layered on top. The Realtor.com 2025 Climate Risk Report identifies Florida as one of the most vulnerable states for climate-related insurance pressures. In a Florida condo, owners must carry their own insurance on top of the HOA's master policy. Both are climbing at unprecedented rates. Miami homeowners now carry the heaviest insurance burden among the top 100 U.S. metros, with very high premiums annually. That's not a typo. Over $22,000 per year just for insurance. In high-risk coastal markets, flood coverage must be purchased separately. Hurricane deductibles can reach 2% to 5% of the dwelling coverage amount. Insurance costs have risen steadily over the last several years, as numerous carriers stopped writing policies in Florida after recent climate disasters. Between 2022 and 2025, 6 major insurance companies exited the state entirely, the ones that remained jacked up premiums to levels that make condo ownership financially unsustainable for average buyers. The math simply doesn't work anymore. Take a typical Miami Beach condo purchased for $400,000. The monthly mortgage payment at current rates runs around $2,500. Add property taxes of $500 per month. Add insurance of $1,900 per month. Add HOA fees that now average $800 to $1,900 per month in older buildings. The total monthly cost? Over $5,900? That's $70,800 per year just to own a condo that's losing value. Real estate data firms are sounding the alarm. The CEO of Reventure recently highlighted that condo owners are unloading units left and right at big discounts. Some buildings are charging $2,000 a month or more in HOA fees, and owners simply can't handle it. Demand for condos is sitting near one of the lowest levels on record, leaving sellers with no choice but to slash prices. The higher carrying costs associated with owning a condo are triggering mass sell-offs. Older inventory is taking the biggest hit as owners try to jump ship before the next round of assessments arrives. Real estate offices across Florida report increasing calls from condo owners desperate to sell. Many are retired on fixed incomes. The extra costs are spiraling out of control. They're forced to choose between depleting their retirement savings or selling at a loss. The selling pressure is intensifying across the state. Real estate offices report a surge in calls from condo owners looking to exit. The pattern is consistent. Owners receive notice of a special assessment, realize they can't afford it, and immediately list their units for sale. But when multiple owners in the same building try to sell simultaneously, it creates a downward price spiral. Buyers see the desperation and lowball their offers. Some buildings have 15 to 20 units listed at once, all competing for the same shrinking pool of interested buyers. The demographic hit is particularly severe. Many condo owners are retirees on fixed incomes, Social Security checks don't increase fast enough to cover $50,000 special assessments or $2,000 monthly HOA fees. These aren't wealthy investors who can absorb the losses. They're middle-class retirees who bought their condos as affordable retirement homes. Now they're trapped between financial ruin and forced sales at steep discounts. Older buildings are bearing the brunt of the collapse. Any condo built in the 1970s or 1980s is now viewed with extreme suspicion by buyers. These properties need the most extensive repairs, face the highest assessments, and carry the greatest risk of undiscovered structural problems. Buildings constructed during Florida's development boom are now sitting on the market with no interest whatsoever. Some owners have slashed prices by 20% or 30% and still can't find buyers willing to take on the liability. The insurance situation continues to deteriorate. Premiums have been climbing steadily over the last several years as carriers abandon Florida after recent climate disasters. The exodus created a supply shortage in the insurance market, giving remaining carriers pricing power they're using aggressively. In high-risk coastal areas, flood coverage must be purchased separately from standard homeowners insurance. Hurricane deductibles ranging from 2% to 5% of dwelling coverage mean that even insured owners face catastrophic out-of-pocket costs if a major storm hits. Miami carries the distinction of having the highest insurance burden among the top 100 U.S. metros. That annual average isn't confined to luxury penthouses. It applies across the market, hitting modest two-bedroom units just as hard as high-end properties. When insurance alone costs nearly $2,000 per month, it fundamentally changes the affordability equation for any property.